In 2021, at the height of the cryptocurrency bubble, Coinbase opted for a direct listing to maximize its valuation. However, the company's extraordinary profits and high transaction fees were unsustainable. The stock price of Coinbase was around $180 at the time. Since we released that video, this stock has lost more than half its value, and it appears that we are now in the final stages before the company's inevitable demise. Hello and welcome to Financial Fortune, your go-to channel for all things related to finance, investments, and the economy. In today's video, we'll be discussing the recent announcement from the SEC that has sent shockwaves through the crypto industry. The SEC has issued a death warrant for the crypto industry, and we'll be exploring the implications of this decision. Coinbase made public knowledge of the receipt of a Wells notice from the SEC on March 22, 2023. This suggests that Coinbase will soon be subject to legal action. The core of the complaint is that it is against the law for Coinbase to facilitate trading in any of the more than 200 coins it lists because many of them are unregistered securities. Coinbase also offers a staking feature called Coinbase Earn, where users can earn a yield of up to 6% on their cryptocurrency holdings by staking them. This accumulated benefit has the potential to be an unregistered security as well. Since last June, Coinbase has had to lay off roughly 40% of its workforce due to massive losses and subsequent layoffs. A company's survival may depend on whether or not they are able to keep their Coinbase Earn program running, while also delisting the majority of their coins that the Securities and Exchange Commission classifies as securities. The U.S. Commodities Futures Trading Commission previously charged Binance and its founder with widespread compliance failures and the intentional sale of unregistered crypto derivatives to U.S. residents, less than a week after the SEC sent a Wells notice to Coinbase. It was widely anticipated that regulators would begin cracking down on the cryptocurrency industry in general after the FTX collapsed last year. The proverbial hammer appears to be about to drop, as evidenced by these two actions taken against the two largest exchanges in the world.
Why don't you take us back, if you could, to when you first got the call from Sam and you first had a chance to look at the books, because I think a lot of people are still trying to understand exactly what happened here. How much of this was about commingling? How much of this was about terrible marking of the books? What did you see?
Yeah, I think I got a call from Sam 48 hours after I made a tweet, and then he wanted to talk. So at the beginning, I thought he would just wanted to, do a buyout on, do an OTC deal to buy out the FTT tokens we had. And then he wanted actually a buyout of the entire firm, of the entire FTX platform. And then, but then we got our team on him. It was pretty clear pretty soon that there's this misappropriation of user funds. The user funds are gone. At that point, it's clearly that he lied to his users, his investors, his VC investors, his employees. At that point, I thought I couldn't, whatever data that's in the data room, we couldn't trust anymore. So it was quite hard for us to do that due diligence. So we didn't go very far.
We've all seen his tweets now overnight. Do you think he understood what he was doing?
I think he thought he understood. I think he probably still thinks he understands what he's doing now, which I don't think he should be tweeting.
That's for sure. But in terms of intent, I mean, one of the things that's going to be looked at, I'm sure, by regulators, potentially by prosecutors, is what he intended to do. He seems to suggest in a lot of these tweets that he didn't understand, or he mismarked things. And when I say mismarked things, mislabeled things is what I think is the phrase that he's used. And yet, when you looked under the books, clearly it appears that he was demonstrably commingling funds, using the funds to leverage himself up and the like.
Yeah, I think, look, I didn't do the due diligence myself, but I think it will be very, very clear that Sam knows that he was using the user funds to do trading for Alameda, and he has been probably doing this for quite a while that nobody else knew until very recently. Well, a small number of people in FTX probably knew, but most of the other normal employees probably did not know. I think that's probably the most likely situation.
One of the things that I think this has demonstrated to the public about crypto is just how leveraged the business is. how so many of these coins, that FTT token and other tokens have been used to leverage other tokens. How concerned are you about that? And how much leverage is in the Binance system, if you will?
Sure. So I think we are very concerned about anybody using the token they create for leverage, as a collateral. At Binance, we don't do that. We don't use BNB as collateral for anything we do. It's very simple. Yeah.
But when you think about the health of the quote unquote balance sheet of so many of these firms in the crypto space, in the ecosystem, how much of those balance sheets do you think are actual fiat currency that has some stability versus some kind of token or other kind of cryptocurrency that may or may not actually have the value that it pretends to have, in part because the float of some of these tokens is so low that it appears the other piece of it is that some people are almost artificially inflating the valuations of these things.
Yeah, so I think there's a couple of things here. There's the user assets. You should every exchange should just hold the user assets as is, as chosen by the users, whatever assets they want to allocate to. There's the operational funds for the business itself. That should be a combination of cryptocurrencies, stable coins, and maybe even some fiat currencies. Every different business can allocate that differently, depending on their risk appetite and the business model. Binance has always been profitable. So even today, we're profitable, we're sustainable. But our rough allocation is about a third in stable coins and then a third in some of the larger coins. And also, we keep the BNB coin that we hold very separately in our accounting. And this has been in our financial reports even from very early days. So we always keep the BNB separate in terms of accounting for the cash flows we have. We do believe that many other platforms may include this as their cash reserves, which is and when they present to potential investors, etc., that may be somewhat risky or misleading. So we don't do that. We have records of our financial statements from very early days. We have always kept BNB separate.
Coinbase. Coinbase dominates the American cryptocurrency market. They offer trading in over 200 alternative cryptocurrencies in addition to Bitcoin. Coinbase also offers a feature called Coinbase Earn, which allows you to earn, stake, or defy yield on your cryptocurrency holdings. Coinbase is at the heart of the SEC case against cryptocurrency because many of the coins it trades are technically securities. Due to the lack of registration, Coinbase should not be allowed to facilitate trading in these securities. If Coinbase is forced to delist a large number of the coins it currently supports, the resulting drop in revenue could have dire consequences, as recognized by the company's upper management. So they frantically tried to formulate a counterattack plan.
My number one priority this year is the policy environment. So we need to make sure that that gets to a good place in the US. You know, the rest of the world has actually embraced crypto. We've seen all the major financial hubs, Singapore and Hong Kong and London, and the EU just passed comprehensive crypto legislation. So really what I believe should happen in the United States is that we need a clear rule book so that this industry can be built here. We don't want it to be like 5G or semiconductors that went offshore. It's actually a matter of national security. We get the future of the financial system built here inside the United States. And so I've been spending more time in DC, here in New York, but in DC in particular, we're trying to meet with the relevant folks that could help draft legislation so Congress can come in and pass comprehensive legislation.
Before we get to the Washington of it all, I want to still look out 5 years from now, because there are a lot of financial players, as you say, that are looking at tokenization. A lot of it's happening in the private markets. To the extent that you think traditional securities can be tokenized, 5 years from now, are you collaborating with any banks to get to that point?
Yeah, so crypto is many different things, right? There are crypto securities, which we believe there should be a robust market for that in the US. In fact, we acquired a broker-dealer license. It's still dormant right now, but we'd like to work with the SEC to activate that and create a healthy market structure to trade crypto securities. Now, of the 1,000 assets we've looked at Coinbase, 800 of them we've rejected. We don't think we have, maybe they're securities. 200 or so of them we have listed on our platform. We believe those are commodities. And so we're going to continue to build that piece of our business. We're regulated by the CFTC, for instance. and make sure we grow that piece as well. But crypto's many things. It's commodities, it's securities, it's stable coins, it's artwork, it's decentralized identity systems, and so it's tough for people to wrap their head around, but it's ultimately going to have many different regulators.
You know, before we get to the regulatory part of this too, we were talking kind of about traditional financial players and what role they have in this place, in this system. What kind of relationship do you have to high-frequency trading firms? Prior to the implosion of FTX, you saw them working, for example, with IEX. Have you had any conversations with them or any others?
Well, we're always talking with different firms out there and other exchanges that may want to trade crypto in various ways. You know, we can act as a brokerage, or exchange, a custodian. We can play different roles in different market structures. And in financial services, you often see, you know, a company that may compete on one product, they're actually collaborators on another product. And so we want to make sure that we're helping integrate crypto into all aspects of the financial system so we can update the financial system.
So you were talking about the SEC, the CFTC, the SEC's crackdowns as of late in particular. You work with a lot of institutions. Hedge funds had been very much getting into crypto prior to last year. I'm wondering if the SEC's crackdown is starting to scare any of them away.
Well, in a way, actually, I think Coinbase has been a net beneficiary of this because there's essentially a flight to quality. You know, Coinbase, we're a public company. We have audited financial statements. We're a qualified custodian. I mean, we're basically the choice, you know, based here in the U.S. that hedge funds are going to want to work with. And so, in Q4, I mentioned this on our earnings call actually, that we saw an increase in the number of institutions onboarding to Coinbase. Now, a lot of them haven't deployed substantial capital to crypto yet in this market environment. They're kind of waiting and seeing, but it's great to see them onboarding, and that's kind of a coiled spring that I think could unleash a lot of potential in the next market change.
Hedge funds still flocking to crypto. Getting into the complicated regulatory environment now. Stablecoins. You were talking about how there are multiple regulators for the crypto industry, but who should be the primary regulator for stablecoins? And is there a case for them to be overseen more like money market funds?
Well, I think Congress ultimately is the one that's going to create the laws in the United States, right? And so we could probably use new legislation, new laws around how stablecoins should be regulated. I don't presume to tell them how to do that, but I think some of the key things are uncontroversial. I mean, we need to have one-to-one backing of assets behind these stablecoins. We need to have audited financial statements to make sure the firms issuing these are doing a good job. So these are just kind of basic good practices, and I think a stablecoin bill is one of the first things that could really help you know, get consensus and move things forward in DC.
To the extent you still have concerns around the stablecoin industry, what would they be?
I mean, as broadly as a concept, I don't have concerns about it. There may be individual stablecoins which are better or worse. I mean, we actually recently delisted, you know, BUSD as an example, and the reason we did that was, you know, Paxos had gotten, who's the issuer of BUSD, had been kind of ordered to stop minting it. So we were concerned about liquidity issues for our customers. But you know, we're always evaluating through our internal processes different stablecoins, different assets, and updating when we see new information that comes to light.
I'm curious about your own way of using stablecoins. Recently in the fourth quarter, it showed that, in your filings, it showed that USDC has doubled in your holdings prior to the quarter before. Why is that the case?
Well, okay, so USDC is growing quite a lot, and I think actually USDC is it's the best answer to a stablecoin in the United States, right? It's issued by Circle, which is a U.S.-based company. We're in partnership with them, and we want to see that grow. It's also been a really nice source of subscription and services revenue for us, which is, you know, in contrast to trading fees, which are quite volatile. We've seen in our Q4 earnings that our subscription and services revenue is now 47% of Coinbase's revenue, almost half. And so that's allowing us to build a more predictable business with a diversified set of revenue streams. So, yeah, I'm quite bullish on USD Coin, and I feel like that's a good solution for the U.S.
Does that look a lot more like traditional banking?
Not necessarily, no. I mean, in traditional, there's many differences. You know, in traditional banking, there's fractional reserve, they have banking licenses, there's capital requirements. Everything in USD Coin is backed 100%. There's no fractional reserve. So I think of USD Coin as a really important tool to help payments be more efficient globally. It's helping provide, you know, access to, you know, something like a bank account, but it could be self-custodial for many people around the world who don't have access to a stable currency. It can improve even, you know, a lot of DeFi, which you mentioned at the beginning. The trading pairs are denominated in USD Coin. So these are all good things which are an important part of the ecosystem.
So let's move to the staking part of the business here, because you have been concerned, you've voiced concerns, you and your colleagues, about the SEC's definition of staking and how they've approached staking. Are you prepared to fight the SEC on any front if you need to when it comes to the staking world?
Yeah, so I mean, we recently saw there was a settlement with Kraken, that's another exchange out there, and they have what they called a staking product. It was kind of more of a yield product, but you know, in Coinbase's case, our staking product is not a security. There's many differences. I mean, customers never turn over their assets to Coinbase, for instance. They're always in the customer's possession, and we're really just providing a service that passes through those coins to help them, you know, participate in staking, which is a decentralized protocol. So that's an important part of you know, the crypto economy that we want to make sure that we ensure that that's out there. And you know, we're prepared to defend that in court if we need to, but you know, we're never looking for a fight. We want to work collaboratively with regulators all over the world, but you know, we have to follow rule of law, and in this case, I think we're well within the law. Given
the stance the SEC has been taking regarding defining certain assets as securities, is there anything that you think will need to get to that point? Mm-hmm.
Well, you know, the SEC has expressed their view about what is a security, and they've taken kind of an expansive view of that. You know, Coinbase, we've evaluated over 1,000 different assets, and as I mentioned earlier, 800 of them we've rejected, and we do think they have some properties of being a security, so we don't trade those today. Another 200 or so of them we do trade today, and we feel that those are commodities. So, you know, look, I think as a CEO, we want to basically just have a clear rule book, right? And if a clear rules are published, we're happy to follow it, and if those rules change, you know, we're happy to follow those. But I think, you know, when we became a public company, we explained to the SEC in our S1 filing and in dozens of meetings that we've had with the SEC, I think we work pretty collaboratively with them. We've explained our business to them many times, including in our S1, and you know, they approved us to become a public company. So we'll continue working with regulators all over the world about where the boundaries are on what's a commodity, what's a security, or what is something else.
You know, we're talking about the SEC and state regulators as well. You know, in regulatory filings, you've noted that you received investigative subpoenas from the SEC and state regulators. How and when do you get those resolved?
Yeah, well, subpoenas are really just requests for information, right? And so we're in dialogue with regulators, not only here in the US at the state and federal level, but really around the world. I mean, we're in European markets, and you know, in Singapore and in Australia, et cetera, Canada, many different markets around the world. So I think subpoenas are an important part of the process. That's them asking us a question and saying, we'd like more information on this, and we're happy to do that.
It sounds like there was a tension between the SEC and the industry before. It sounds like some of those tensions have boiled up after FTX. I'm wondering if you think that the conversations between Coinbase and the SEC in particular have gotten more or less contentious over the years.
I think we have a good relationship with the SEC commissioners and staff, and you know, I've met with the chair as well, and so we're going to continue to invest in those relationships. I would like us to find a way to bring crypto. I think this is what they want too. Our interests are aligned. We want to bring this industry within the regulatory perimeter so that we have good consumer protection, but we also preserve the innovation potential of this. And as I said earlier, you know, 80% of Americans want the financial system to be updated, and this is the most important technology I'm aware of that can help do that.
So you and your colleagues have also voiced a lot of concerns. Today you voiced concerns about kind of more of the crypto industry moving offshore. Mm-hmm. Draw us a picture here of what happens in 5, 10, 20 years if the digital asset landscape exists mostly outside of the United States.
Yeah.
In exchanges that are not based here.
Yeah. Well, I mean, look, I think that would be a terrible mistake for the United States. I mean, look at what's happening with AI, right? That's an important technology trend where it's becoming a matter of national security, right? That some of these things are built in the US. Or we saw it in the past with 5G or with semiconductors. And so if we have this really powerful technology, cryptocurrency, that has the potential to update the financial system and improve it in so many ways, how can we sit on the sidelines in America and say, oh, okay, well, we're going to let the EU pass comprehensive legislation, and so it'll be built there, and we're going to let the UAE and London and Singapore and Hong Kong. I mean, this is America. We need to be a technology hub. We need to be a financial hub, and the future of this industry needs to be built right here in America.
The SEC considers certain coins to be securities. Who is correct, then?
If SEC were to take actions, many other actors may got the actions or get the kind of investigation first. And Coinbase has been operating in a relatively transparent way. So I am actually pretty surprised to see Coinbase get the Wells notice. And to me, this is an indication that there will be more enforcement actions against not just Coinbase, but the whole industry. And then the second reason being, not many people talk about the economic report of the president got published on Monday, and it got actually a lot of the response from the crypto industry. And in that report, the report has a lot of criticism against the utility of digital assets, which is a big change from the Treasury statement from last year.
Oh, and when it comes to the likelihood, though, of passing some crypto-related bills, at least in the near term, is that likely, or when do you think we'll see a wider crackdown here from regulators?
I actually went to DC yesterday. I attended an event. I talked to some staff members in the Congress and also talked to some industry experts on the ground. My impression from my conversation is the probability of passing a bill like classify which one is securities, which one is commodities, or which agency would oversee crypto exchanges like Coinbase is very low. I mean, it doesn't mean that it won't happen, but based on my conversation, I'm not optimistic about that. So what that means is before we have a regulatory clarity, there will be a vacuum for more enforcement actions. And that's the number one thing I am very worried about.
Where will regulation eventually come from? Will it be the SEC, the CFTC? Will Congress agree on the rules of the road? Where does it need to come from?
It needs to come from the Congress. We need to have a legal framework first. We need to get the bipartisan support. Based on my conversation yesterday, I was hopeful that there may be a new bill coming out next month or so, but you never know. You never count on a new bill coming out and get the bipartisan support from everybody. But the number one thing has to come from the Congress first, and then people can give their opinion. And I mean, the other way is I'm also hopeful that the White House can take the leadership role to coordinate between CFTC and SEC so that we can minimize these regulations by enforcement actions. But based on the economic report, I think that probability is also very low.
No, and despite all these concerns, despite the uncertainty out there, the price of Bitcoin has held up remarkably well. We're looking at it above 28,000 today. Last month, it's been a gain of just over 17%. The last 6 months, a gain of 45%. What do you make of this consistent momentum, essentially, to the upside here in Bitcoin?
So the run actually starts from, I think, 2 weeks ago when Signature Bank went down or got shut down. And that run tells me that people may be worried about the traditional banking system in the United States, and they may view Bitcoin as a safe haven. We can argue that whether this is true or not, but based on the relative performance, if you look at S&P 500 or BKX and Bitcoin outperformed a lot over the past 2 weeks. So this is an indication that people would rather put their money into Bitcoin, which is more like a decentralized network, decentralized system. They don't have a single point of failure, unlike traditional banking system. And I think that sentiment drives that run over the past 2 weeks.
Indeed. All right, just want to make sure we get in the statement from Coinbase. They told us, the SEC staff told us they have identified potential violations of securities law, but little more. We asked the SEC specifically to identify which assets on our platforms they believe may be securities, and they declined to do so.
That's all for today's video on Financial Fortune. We hope you found this information useful and informative. Don't forget to subscribe to our channel and hit the notification bell to stay up to date on the latest news and trends in the world of finance. Thanks for watching.